after the Easter weekend that the property market traditionally starts to really take off. But just how well is the UK property market faring? House price rises have continued to surge to new highs on almost every measure, seemingly oblivious to the 3 interest rate rises by the Bank of England since last summer. So is the trend set to stay? With us are 2 experts with differing views. Henry Pryor, who's founder of PrimeMove.com, a property database. Hello.
Morning to you.
And John Wriglesworth from the Wriglesworth Consultancy, an expert on the housing market. Good morning, John.
Good morning.
Let me start with you, John. What do you think will happen to the housing market? Can house prices stay this vertiginously high?
I believe they can. You've got to remember that back in the 90s, when the last housing market crash occurred, interest rates were 15%. Now, despite the rises, the recent rises, they really are rather like snowflakes on icebergs. They're not making any effect whatsoever in terms of basic affordability, which remains good. Lenders are falling over themselves, offering lucrative deals around 5%. And quite simply, if interest rates are 5%, not 15%, people can afford much more expensive houses than, say, 10 years ago.
Henry Pryor, let me ask you for your view. What do you think will happen to the housing market?
I think the housing market's a little bit like Liz Hurley's wedding, frankly. I think it's been impressive. A lot of people have enjoyed it. If you weren't included and weren't invited, it's been a little annoying. But frankly, for most people, it's gone on for too long.
I'm sure Liz Hurley would say her wedding wasn't exactly a disaster.
No, I think it was a great thing if you were there. But if you're a first-time buyer in the property market in this country, the average age is now creeping over 32, 33 years, and it's difficult to get involved.
Do you think prices can stay this high?
I think they will do, but I don't think they're going to continue to rise at the rates they have. We've seen rates in central London, for example, of 10% plus so far this year, which is astronomical. But that has to be balanced out by the fact that nationwide the picture isn't the same everywhere.
So yeah, identify those differences between the hotspots and the rest of the country.
Well, London, as I say, has its own little matrix and works on, as most of the country does, on supply and demand. In London, the supply side has been incredibly tight, and that's seen prices rise considerably over the first quarter of this year. Outside London, the picture is very different. Nottingham and Leicester, for example, have seen a 2% fall in the last month, according to the last Halifax survey that came out last week.
John Wriglesworth, I mean, it's the sort of pattern that you'd expect when house prices begin to take off, don't you? London starts usually and the rest of the country follows. But we've had all that already happen. And now you're getting London being a hotspot again, other popular places like Bath being a hotspot again. What do you read into that?
The thing is that there's people with money to spend, there's people with housing wealth already that are releasing it either to buy more expensive homes or releasing it to let their children buy homes. There's city bonuses in London which are particularly having an effect at this time. There's no end to full employment, the population is growing, people are wealthy, the country is, albeit with Gordon Brown might be criticised, has presided over an amazingly successful 10 years of prosperity. So there's people with wealth, people want to invest in property, and there seems to me no end to it, if not in the short term anyway.
You talked about the interest rate rises as being like snowflakes on icebergs, but a lot of the time the estate agents or the mortgage lenders will cry out in pain if you raise interest rates even by a quarter point. Surely it has some effect.
At the moment, I don't really believe it is. Each 0.25% is so small that I don't think it registers on the radar of people trying to buy homes. And lenders who are very keen to have short-term discounted mortgage rates, 2-year discounted mortgage rates for about 3 to 4%, or fixed rates, which seem to have almost been immune to the most recent rate rise, are still very low by historic comparisons. And also lenders are now lending up to 5 or 6 times income, which they never did in the old days, so people can really afford more expensive homes.
Henry, that is one reason why the interest rate rises haven't had much of an effect, isn't it? Because people can still get very cheap mortgages.
I couldn't agree more. John and I would agree entirely on this. At the end of the day, with the way that property values are going at the moment, frankly, half a dozen people in Threadneedle Street agonising over whether not to raise interest rates by a quarter of a point is the equivalent of trying to move a supertanker with your nose. It really is quite unnecessary.
What about home information packs? Might they have more of an effect on that supertanker? I mean, they're coming in June the 1st. What sort of effect do you think they'll have?
Well, I personally think that home information packs are going to have a massive impact on the market.
Why?
Because the country's largest independent estate agency chain are leading the way with a £500,000 advertising spend to encourage vendors to put their houses on the market before the 1st of June to avoid what they're calling this home information tax. Basically, for the first time ever, you're going to have to pay £500 to £700 to market your property regardless of whether you sell it or not. Now this is to produce what the government originally conceived as an idea of helping to speed up and to simplify the house selling process. But in fact, all that's been left once the dust is settled is an energy efficiency report that's required before you put your house on the market, which will give you a refrigerator-style energy sticker to put on the window of the front of your house, which will tell a potential buyer of your house whether you've got a lot of lagging in your loft or how efficient your boiler is. All that information is then going to go into a pack along with perhaps the local searches and some legal documentation, which is required by law now from the 1st of June, regardless of whether you sell your house or not. And that's where it's going to make.
Don't they have surveyors anymore then? Have they gone out of fashion?
No, surveyors are still very much in fashion, man. It's one of the moot points. There's a whole new industry that's building up to do these energy efficiency reports. They think that they're going to need variously somewhere between 2,500 or 4,000 of these inspectors who have to be qualified, have to be trained and have to get qualified before the 1st of June, who can then go around and this is all to save energy. I mean, this is the ridiculous thing about this.
Aren't we being conned here?
Yeah, this is the ridiculous thing. In order to save energy, you have to have this inspection. A guy has to turn up, he's got to walk around your house, he's then got to drive home, create the report, and all apparently to save you 300 quid.
John Wriglesworth, the theory is that this creates a sort of buy now while stocks last effect, like there was in 1988 when you had the abolition of double Miras, and that will distort the market and threaten a crash.
I think there will be a distorting effect, but it's not going to be as large as it was in 1988 with the abolition of double Miras. The benefits for getting in quicker are just not that much. The energy report will cost about £250 to £300. For most estate agents, the fees of that will be absorbed into the whole house buying cost, so people will not have to pay up front if they're selling their home. So I believe that, yes, that the estate agents are trying it on the moment, trying to get people in, getting quick before 1st of June. There will be people putting their houses on before 1st of June, but it'll be about 2 months of transition, and then it'll get back to, I think, quite a normal market. And the energy efficiency reports, unfortunately, have to be brought in European-wide. There's no choice in the matter. It's a European directive. So I think minor distortion, but long-term no effect.
John Wriglesworth and Henry Pryor, thank you both very much for coming in so early.